Chapter 10, Financial Planning with Life Insurance. And here are the learning objectives for this chapter. So life insurance is one of the most important and expensive purchases you'll ever make. Do you purchase life insurance for you? No, you buy it to protect your loved ones. There are many uses of life insurance benefits. So I might have mentioned this in a class before, but my mom died a long time ago in a car accident. I was in my early 20s and she didn't have any life insurance. So my sisters and I were all young, just starting out, had families. We didn't have the money to pay for her funeral. So luckily, my husband, who was my boyfriend at the time, took out a loan. It was a high interest loan to pay for my mom's funeral. So that was a really hard decision for him to make. It was hard for us to figure out how we were going to pay for her funeral. So because of me having that experience, I made sure that my family was going to be protected if something happened to me or my husband. And then also we worked really hard with my dad over his lifetime to make sure that that wasn't going to be an issue for him. So my dad died a couple years ago. He had life insurance. He had enough to cover the funeral expenses. We didn't have to come up with any money for anything else. So the money part of his passing was not such a burden on us like it was when my mom passed away. No one can say with any certainty how long a particular person will live. Here are some life expectancy tables. As you can tell, currently, women are expected to live till they're 81.2 years old, men 76.4 years old. So that's taken into account when you're being told how expensive your life insurance will be. Generally, if your death would cause financial hardship for somebody, then life insurance is a wise purchase. Here are two popular ways to estimate your life insurance requirements. There's the easy method or the DINK method, and DINK stands for dual income, no kids. Here are two other methods. You would need to decide what you want your life insurance to do for you when picking one of these methods. Do you want life insurance to just cover your funeral and that's it, like we did with my dad? Or do you want life insurance to cover, to pay off your house and any big debt you have in case something happens to you or a spouse so that you could continue to support your family? Do you want to purchase life insurance so that you have a large amount of money to set up your children when you pass away? Or I know somebody that took out a large life insurance and had the beneficiary be the soup kitchen. So they wanted their last act, I guess, to donate a large amount to the soup kitchen or another nonprofit. So you just need to figure out what you want that life insurance to do for you. And here's a table identifying differences between two types of policies. You may choose stock life insurance or mutual life insurance. Both stock and mutual companies sell term and permanent life insurance. So term insurance is for a certain amount of years, or permanent life insurance is, of course, until you pass on. Term insurance is often the best value for customers. I personally have a large term policy that covers all of my debt, including my mortgage, and would cover final expenses And then I have a permanent policy that that's a smaller amount that will just go to my family for whatever would come up. Whole life insurance is permanent insurance that builds cash value. And what that means is if you could borrow money from your life insurance at a later date, or if you had to cancel your life insurance later on, you would get that cash value coming to you. There are many types of whole life policies. Universal life is a term policy that builds cash value. Here are 3 more types of life insurance policies. There's group life insurance. That's usually provided by your employer. Like I believe my group insurance covers 2 years of my income or something like that. There's credit life insurance. That is a life insurance that would pay off your loan if something were to happen to you. Or there's endowment life insurance. And here's a table comparing term, whole, and universal life insurance policies. There are many possible provisions in a life insurance regarding who receives benefits, payments, and cancellations, or accrued benefits, loans, suicide clauses, and coverage. An insurance company can change the conditions of a policy by adding a rider to it. You should consider a number of factors before buying life insurance. Fortunately, you have a choice of sources. Choosing your insurance agent. I use my State Farm insurance agent. I get my house insurance, I have disability insurance, auto insurance, and then life insurance, all from my State Farm agent. I also have my whole policies bought through work. So the best way to choose your insurance agent is to ask friends, parents, and neighbors for recommendations. You know, it doesn't matter what a commercial says or what an ad in a magazine says, but if you talk to people and they've had a good experience with someone, that's who you'd want to choose. Is the agent available when needed? Does the agent advise you to have a financial plan? Do you feel pressured? You should never feel pressured by your insurance agent. Does the agent keep current with changes in the insurance field? My insurance agent just met with me to go over, there's some new changes with auto insurance. So, so then she informed me of all of those changes, and I was able to tell my friends and family what those changes meant for them. Is the agent willing to take the time to answer your questions and find a policy that's right for you? And then shop around. Don't go with the first amount that is quoted to you, or don't go with the first person you've reached out to. Like I said, I use a State Farm agent. She's also a friend of mine. We're in the Rotary Club together. However, when we decided to put all of our insurance together with one company, I asked around and I got quotes from 3 different companies. And then I ended up choosing who I'm going with now. Obtaining and examining a policy. First, you have to apply. Second step is to provide medical history. Some life insurance, if it's a smaller policy, it does not require medical history or a medical exam, but larger policies do. Read every word of the contract. There's a 10-day free look period where you can change your mind after you sign up for life insurance. Within 10 days, you can change your mind, and then give your beneficiaries and lawyer a photocopy. Choosing settlement options. Selecting the appropriate settlement option is an important part of designing a life insurance program. You can set it up to where your beneficiary gets a lump sum. That's usually the most common. That's how I have mine set up. But you could also set up a limited installment plan. Let's say you took out a $500,000 policy that you're leaving to your daughter as a beneficiary. Well, that might be a lot of money for somebody to handle. So you could spread out those payments over 10 years or 5 years or 20 years just to make sure they have a continued income after you pass away. Life income option, you can also do that. You would buy an annuity, or your life insurance payment would buy an annuity, which would buy lifetime payments to your beneficiary. Proceeds left with the company. Instead of your life insurance going directly to a person, you could leave them with the life insurance company where they would invest it and pay that interest to your beneficiary. I mean, there's all different ways you could arrange that. Think twice if your agent suggests that you replace a current policy. Life insurances usually have to have a health exam. Your health exam from 10 years ago may be a better health exam than what this year would be. So you might get stuck with a higher premium. Also, your premiums go by your age. So you're, of course, going to be older now. So you might want to try to stick with what you have unless there's something really not working for you. So I said a little bit about annuities. Annuity protects you against the risk of outliving your assets. So let's say you have $100,000. And instead of just investing that $100,000, you could use that money to buy an annuity, and then that annuity will pay you a monthly income for the rest of your life. They estimate what the rest of your life might be. So sometime, you never know. You may pass on before that estimation, and then you're out those payments. Or you may live longer than their estimation, and then you end up getting more payments than you thought you would. So it's a little bit of a gamble, but if stability is important to you, that may be the route to go. The primary reason for buying an annuity is to give you retirement income for the rest of your life. There are all types of annuities with different payment and earnings options. Be sure you understand all the annuity costs before you invest. And as with any financial product, the advantages of annuities are tempered by drawbacks. And that is it for this chapter.